I'm Pate Butler, and this is AutoPilot Your Wealth, the channel where we build wealth with rules instead of reactions. Today, I'm opening the door to the cockpit. I'm going to show you the actual accounts I run, real money, real positions, not a demo and not a hypothetical. If you've been here a while, you already saw me set up the small one from scratch a few weeks back. Today, you get to see all of them. There are three, and I've named them like a flight crew, biggest to smallest. The captain account runs a QQQ barbell, and it's the largest, sitting at a little over $230,000. The first officer account runs a spy barbell around $188,000. And the cadet account, it runs a QQQM barbell right around $40,000. That's the one I already walked through on camera. Here's what today is and what it isn't. Today is the introduction. I'm not going to be making a trade. I'm going to show you what's inside each account, how each one is done since I set it up, and then I'm going to lay out exactly how this channel is going to run from there. Two things to stay for. First, starting in October, I began walking through these accounts every single quarter, and one account gets its yearly rebalance each time. I'll show you exactly how that schedule works in a few minutes. And second, stick around to the end because I get more questions about how I actually run the barbell and when I rebalance than anything else. At the end of this video, I'm going to walk you through the exact order to learn all of it. That's the answer to the where do I start question, and it's coming at the close. But before we open the accounts, let's take a quick look at what the market's been doing. I'm going to do this with SPY, the S&P 500 ETF. Here's about the last year and a half of SPY. I've got two things on here. The blue line is the 200-day moving average, kind of the long run trend, and these bands around price are the Keltner channels, which gives me a sense of when price is stretched too far one way or the other. Back over here you can see the tariff in 2025, a sharp drop and a fast recovery. Then through the spring we had the drawdown around the Iran conflict where the market pulled back and volatility picked up. After that, we've been on a real tear higher. And now, most recently, we're in a lot of back and forth. We're chopping sideways, sitting down near the bottom of the Keltner channel as I record this. Here's a tighter look at just this year so you can see that chop up close. Back and forth, no real direction, hanging around the lower end of the channel currently. If you're wondering why the market's been stalling out here, it's really two forces. One is the AI and chip trade unwinding a little. Some of the big semiconductor names have gotten expensive and money's been coming out of them on worries about how long that AI spending keeps up. The other is the Iran situation, which keeps oil and inflation fears in the mix. Put those together and you get this sideways, indecisive market. Here's the honest truth though. Nothing I see out there really changes what I'm going to do with these accounts. Now, I stay in tune with the market every day. I watch how the Treasuries are reacting, how inflation's coming in, whether the market's consolidating or spiking. I've got other things I keep an eye on too, but with the barbell, all that watching isn't me looking for a move to make, it's me understanding why these things are happening. So when my account reacts a certain way, I know exactly what's behind it. Because the barbell rules are already in place, regardless, if the market rolls over from here, that's fine. When the rebalance time comes, I rebalance and I re-leverage at lower prices. If it breaks out and keeps running, that's fine too. We've already invested and we ride it. We're positioned either way. I don't control what the market does and I don't try to. That's the whole idea behind the word autopilot. Next instrument, this is the VIX. And for anybody newer to options, the VIX is basically the market's fear gauge. When it's low, people are calm. When it spikes, people are scared. Here's about the last year and a half of it, and I want you to notice how it behaves because this is a lesson by itself. See this huge spike over here during the tariff sell-off, the Liberation Day drop? The VIX shot up towards 60, and then look what it does. It comes right back down like an elastic band snapping back. Fear spikes, and then it fades. That's what volatility does. It doesn't stay up there. Then you can see the peak of the Iran war show up through roughly February, March, and April, where the VIX climbed and stayed elevated for a stretch, coming back down toward the middle of April, and then a small pop in June before it settled again. And here we are now with a little tighter look. The VIX is sitting somewhere under 17, so despite the sideways chop in price, there's not a lot of fear in this market right now. It's a fairly smooth ride at the moment, calm, not choppy. Last instrument I check, and this one matters for the bond side of the barbell, the Treasury yield curve. First, I like to pull up this site, USTreasuryYieldCurve.com, because it gives you the whole curve in one picture. Right now, the 3-month is a little above 3.8%, and the 10-year is sitting a little under 4.6%. So the curve slopes up. Short rates lower, longer rates higher. That's a normal curve. This site also shows me the upcoming schedule over on the left. It's the next Fed meeting, when the inflation data comes out, when the meeting minutes drop. One good picture to stay informed. Then for the actual numbers, I go straight to the source, the Treasury's own site. As of the most recent reading, the 3-month is about 3.84% and the 10-year is about 4.57%. 10-year higher than the 3-month. So we've got a normal curve, not inverted, and a normal curve means I'm in intermediate Treasuries, which for me is IEF. Now let me put my bond rules up on the screen real quick so you can see the whole system on one card. These are simple on purpose. Rule 1, the curve. If the 10-year is higher than the 3-month, the curve is normal and I hold IEF, intermediate Treasuries. If it inverts, where the 3-month is paying more than the 10-year, I step down to the short-term SGov and I wait it out. Rule 2, the Fed. If I'm holding IEF and the Fed hikes hard, 100 basis points or more inside 90 days, I move to the short end. SGov until things settle, and if you're not familiar with basis points, 100 of them is just a 1% move. That's all that means. Rate hikes are what damage bond prices, so I get out of the way. Rule 3, getting back in. To rotate from SGov back to IEF, I need both signals quiet at the same time. The curve has to be normal again, and the 3-month can't have jumped more than 100 basis points over the trailing 3 months. Today, both signals are quiet. Normal curve, no rate shock. So the rules say hold IEF, and that's what all 3 accounts are holding on the bond side. And by the way, IEF isn't the only fund that holds these treasuries. I did a whole episode on what's really inside a bond fund. I just happen to use IEF. If you want the deep version of these bond rules, it's in the playlist I'll show you at the end. All right, before I open each account, let me answer the obvious question. Why do I run 3 separate accounts instead of just one? The answer is that I want to show you that this same system works across just about any size and across the 2 indexes I trade. Whatever your situation looks like, one of these 3 is the model for you. Largest to smallest, here's the logic. The captain account runs the QQQ barbell. QQQ is the NASDAQ 100, a different index than the S&P 500, and it gives you a little more growth with a little more volatility that comes with it. This one just happens to be my largest account. The first officer account is the SPY barbell. SPY is the broad U.S. market, the S&P 500, and it's the entire foundation this channel is built on. I've got a whole video on why I build on the S&P 500, nothing else, but the short version is simple. It's the broad market, and over the long haul, it's a winner. And the Cadet account is the QQQM barbell. Now, here's the thing about QQQM. It gives you that same NASDAQ exposure as the captain's QQQ account, but in a much smaller contract. So a smaller account can actually run it. On the captain's QQQ barbell, one long-dated contract at 10% in the money target runs somewhere around $17,500. That's just for one contract. On the option side, that same kind of contract on QQQM runs somewhere around $7,600. So the Cadet account lets you get into the same strategy on the same index for well under half the ticket. That's why the small account exists. It's proof you don't need a big balance to do this. Now let's actually open them up. We'll start with the biggest, the captain. This one runs the QQQ barbell. Total account value is right around $230,000. Total gain since I set it up is a little over $14,000, which is about 6.5%. On the bond side, IEF is about 55% of the account. On the growth side, the QQQ leaps, the long-dated call options are about 45%. So this one's sitting at a 60-40, a little heavier on bonds. I built it that way because I figured QQQ being the NASDAQ would be the more volatile of my accounts, so I should give a little bit more ballast. But here's the thing, when I did my SPY versus QQQ backtest, the 2 indexes came out with about a 0.95 correlation, which is a fancy way of saying they move almost in lockstep. The extra downside on QQQ in a bad year turned out to be pretty small, so that extra caution wasn't really buying me much, and the 50-50 actually tested better. When this account comes up for its rebalance in January, I'll reallocate to a 50-50 barbell. Now every month I make a deposit into this account, and I put it straight into IEF on the bond side. That new money stays in IEF until my rebalance date next year. So throughout the year, you'll see my bond allocation expanding as I dollar cost average into IEF. Now let me show you something for anybody newer to options, because this is where it gets interesting. Here's a chart of QQQ. Back around the end of April is where I set this barbell up, with QQQ trading somewhere around $660 a share. And today, QQQ is around $697, even after the sell-off we've had this week. So the underlying QQQ itself is up roughly 5.5%. The leap sleeve by itself is showing something like an 18.5% gain over that same stretch. Underlying up around 6%. The options are up around 18%. That gap right there, that's the leverage. That's the whole reason I own the leaps instead of just buying shares. When the market runs, the long-dated calls run harder, and that's the convexity doing its job. Next one down, the first officer. This one runs the SPY barbell, the broad market. Total value right around $188,000. It's up a little over $25,000 since I built it, which is right around 15.5%. This account has a little history to it. Before I ran the full barbell here, I already owned some SPY leaps on their own as an overlay. Then back in the spring, I decided to turn this into a proper barbell, so I kept the leaps I already had and added to them to get the account where I wanted it. That's why if you look at the option side, you'll see 2 blocks of contracts instead of 1. One block is older and one I added when I built the barbell. Let's look at SPY. Over the time I've held these, SPY itself is up somewhere around 15%. But my option sleeve, both blocks together, is up around 38%. And that older block, the one I've held the longest, is up around 60% all by itself. Same idea you saw in the Captain account. The index moves a little and the long-dated calls move a lot more. That gap is the leverage, and the longer you hold them through a rising market, the more that convexity works in your favor. This account gets its proper rebalance in October, and then I'll get those 2 blocks lined up right where I want them. I'll lay out the full schedule for all 3 accounts a little later in the video. And the smallest, the Cadet. This is the QQQM barbell, and it's the one I already walked through step by step on camera a few weeks ago. So if you want to watch me actually build one of these from scratch, that's the video to watch. Total account value right now around $40,000, and this one's currently showing a small loss, down a little under 1.5%. Inside, this one's set up as a 50-50 barbell. IEF on the bond side, the 3 QQQM leaps on the growth side. This one I set up on June 9th. QQQM was trading somewhere around $289 that day, and that's about where I got filled. Today, QQQM's around $287, so it's basically flat. Just a touch below where I bought it. That's why the account's showing a small loss on paper right now. Okay, so that QQQM episode showed you how to set one of these up from scratch. Today, opened up the door and showed you all of them. Now, let me show you how this is going to run going forward. Every quarter, I open all 3 accounts and give you the update. And each quarter, one of the 3 gets its once-a-year rebalance. I will stagger them so you get to watch a rebalance happen every single quarter. Here's the schedule. In October, the first officer account with SPY gets its rebalance. In January, the Captain account with QQQ gets rebalanced, and that's the one where I moved to a 50-50 barbell. In April, the Cadet account with QQQM gets its turn, and then July is a pure update, no rebalance that quarter, just to check in on all 3. Then it will repeat. In real life, I wouldn't space them out like this. I'd just rebalance each account on its own anniversary and be done. I'm staggering them for the channel so that you get to see a rebalance every quarter instead of waiting a full year to watch one happen. Once a year is a long time to wait to see the thing you came here to learn. This way, there's always one to watch. And there's a 4th one coming, but it's a little different, so it gets its own series. I'm going to introduce you to a model portfolio, and I'm going to follow it in real time. The character is Captain Cole. He's retired, he's drawing Social Security, and he's running a $1 million portfolio as an 80-20 barbell on SPY. 80% in Treasuries, 20% in the SPY option sleeve. Here's what makes it worth following. Every single month, we'll watch Captain Cole pay himself out of his portfolio the way a real retiree lives off their money, and then we'll watch him manage it. Once a year, he gets his rebalance just like the real account, so that one's a monthly series, and you get to watch a retirement plan actually play out in real time, month by month. And one last thing on the schedule, the quarterly updates are the backbone. But if something big happens in between, a real sell-off, or the Treasuries flip, and I have to rotate to the bond side, or whatever it might be, I will put out an episode for that when it happens. All right, before I let you go, this is the part I promised at the top, and it's the answer to the single most common thing people email me and ask about in the comments. How do you actually run the barbell? When do you rebalance? Where do I even start? Every bit of that is answered in order in a playlist on this channel called the Foundational Flight Plan. Let me walk you through what's in it because it's built to be watched start to finish, and each video builds on the one before it. It opens with why I build everything on the S&P 500. From there, it walks you through options. There's a video covering the strike price rule, which is really just basic options and how they fit into this system. And then one on the leaps math, what these long-dated options actually are, and the leverage with defined risk idea that makes the whole thing work. If you already understand options, you can probably skip these two. But if options are new to you, that's where you get up to speed. Then it gets into the data, and this is the heart of it. The first study tests every leaps allocation across 67 years of market history. Now, this one is on SPY with a SPY leaps overlay, not the barbell. So it's just for anyone who wants to run that overlay on its own. It's the data behind how I set it up. The second study looks at that same overlay, but this time testing every strike from at the money down to 20% in the money. And that's where I landed on 10% in the money as the sweet spot. That's the rule I used to pick every contract you saw today. After that, there's the bond half of that same system, what's really inside a bond fund, and how I read that Treasury yield curve I showed you earlier. And only then, once you've gotten all the pieces, does it actually assemble the barbell. There's an episode that puts 5 portfolios through the 2008 crash to show you how the leaps and the bonds work together when it really matters. And then the big one where I test every barbell setting across 67 years against the S&P 500. The last 2 videos take it over to the NASDAQ, one showing you why QQQ isn't as dangerous as people think, which is what opened the door to running a QQQ barbell in the first place. And then a head-to-head of the QQQ barbell against the SPY barbell. So that's the map. If you watch those in order, you will understand every single trade I make in these account updates, and you'll know exactly when and why I rebalance. I keep the mechanics in that playlist so these quarterly episodes can stay focused on the accounts. And as I add to the foundational flight plan over time, that playlist is where it'll live, so it stays your starting point. Well, that's the cockpit. Doors open, all 3 accounts out in the light. Today was the introduction. The real work starts in October when the first officer account gets its first rebalance on camera. If you found this useful, subscribe so you can follow the whole thing from here and hit the like button so more people find it. Whatever the market does between now and October, we're positioned either way. Stay disciplined, stay patient, and I'll see you on the next flight.